What's up, everybody? Today is Friday, April 28th, 2023. Today is the third week of finding your way with LasagnaCat. He's made some great progress. He had a bad, or he was under the weather this week, so he he didn't take as many trades as he would have liked. But still, he's identifying his setup. He's making it more clear. He's fine tuning his rules. Um, and that all comes with mistakes. Even learning progress comes with mistakes, but the good thing about mistakes, and you always got to look at them in a positive light, is that mistakes are the ones that you learn from the most. I noticed that when I blew up a couple accounts, you kind of ingrain those mistakes into your head. Um, but you got to take them in stride and learn from them. You don't want to repeat the same mistakes. Something that helps you with mistakes is actually writing down the mistakes, or write down your mistake, how you're going to improve it, and how you're going to use it in the future. That all comes with experience, screen time, um, and watching the candles develop will help you avoid mistakes in the future. But as we go, your eyes are going to start to pick up as we progress. Your eyes are going to start to pick up little tips and tricks of how the candle's developing, how it's holding the support level, how it's holding the moving average, how the RSI kind of leads leads the way. That's what I've come to find the last couple of weeks, is that RSI kind of tells a story, or is like, it's kind of like a fishing guide. So a fishing guide, right? It tells you, he takes you fishing, and he drops anchor, and he said, "Oh, this is a great area for fishing. We always catch fish here." Okay, so the RSI is kind of like that. The RSI is a guide that says, "Okay, here's a good support area. Here's a good entry. Get in, or or start looking for other catalysts to get in." Because you don't want to just get in because of the RSI. You want to use the RSI to identify a good support area, and then start doing your chart analysis. Check TTM, check volume, check MACD, check price action, check where the moving averages are, or the fib levels, whatever your tool you use. Use RSI to kind of guide you through it. Um, so without further ado, we'll be jumping into adding moving averages and how to use moving averages as the next setup. We gave LasagnaCat some homework last week on, add slowly start adding more tools to his setup. Um, so yeah, without further ado, LasagnaCat.
Hey everybody, how you doing? I'm going to share you some trades from my week. As Semper was saying, I've been feeling under the weather and didn't take as many trades as I wanted to, and my setup just didn't show up as much. My first couple of trades I want to show you are reds that I took. This one right here is a red, but I realized before I get into that, since since these recaps are all based on me trading like the setup of my choice, I realized I should just begin by showing an ideal, like the ideal setup. So this is the setup that I'm working with. This is the setup that I'm attempting to really perfect, for lack of a better word, make great progress on, have as one of my A plus setups. So what the A plus setup um, is it begins with a dump down, a huge bleed out, um, and then a higher low, and then another higher low for entry. This setup is based on, as Semper was saying, RSI. So a good fishing spot potentially that your fishing guide might tell you about is RSI overcool and then recovery of that. So this setup kind of relies on like you looking at that as your first indication that something could be happening. And it also needs to happen on a good support. There was good support right here on SPY. This is my MES chart. So then RSI followed by a good MACD look, which is MACD making a cross. And it also involves Fibonacci, this red pullback right here, pullback to low. We got our nice higher low, first one indicated by this little asterisk. And then this was my entry in my fib zone to a 161 target, a 200 target. If anybody has any questions about that, I know I ran through it pretty quickly. But it's because I got some trades to get to from this week. But this is one that I took last week. This is like the ideal setup. So that's what I'm going for. And as you will be able to see from my first couple of recaps, I made a few mistakes in following that. So here's the first one. This is from Monday. It's the very first trade I took in the beginning of the week. That being the case, I think there was an element of me just being a little too hasty in wanting to identify my setup and wanting to test out the setup. You know what I mean? So like, here's what happened. So this was a really big dump down, which is like my first indication that, I could be like looking for my setup. And I noticed that we got some candle closes inside Bollinger Bands right around my support. Now I was watching the support level all day. The support level had worked out the previous week really well. It was a weekly doji level combined with a 38 fib from I think a CPI candle and also a daily doji. So it was stacked up. Note though that it didn't touch support to a T right here. But I was looking at, down here at the bottom, RSI overcooled, looked good. And MACD was closing in for the cross. So I was like, all right, this, I'm getting eager now. I'm getting that feeling like, oh boy, here comes, my moment, my little moment. So I got my first red pullback here and I pulled it down. I pulled the fib down to the bottom. Another thing that enticed me was like there was this triple tweezer look on the bottom. So I was like, oh yeah, like a triple tweezer, like right by my support. Didn't hit support completely though. So you know what? It pulled back into my ad zone. I figured RSI, MACD look good. Let me get in. Here's where things get a little dicey. So this line right up here, this dash line, 9 EMA daily. That's big resistance. Something I wasn't looking at the time, if you come over here, this side of the screen, I got my 30-minute chart. Now, this is price action under the 50 SMA 30-minute. Huge, huge, huge resistance. If you go down here at the bottom on the right, this is my 5-minute chart. Price action on 5-minute is starting to hold below the 200 SMA on the 5-minute. So I was dealing with some really huge support there. And at the time, I was kind of unaware of it, but I was noticing it, but I was like not taking it seriously, which was my mistake. Because when you stack up major time frame, not major time frame, but major moving averages on 3 different time frames, that should tell you something big. But here's the play out. So it started going up here, and I was like, hell yeah, that looks strong to me. And then it rejects and comes back into my ad zone for what looked like strength. So I was like, hey, it's holding my ad zone. Awesome. Then it does it a third time. I was talking to Semper before, and if I understood him right, and I believe I did, is that we got our level up here. It's our 100 fib and the 90 May daily. Semper was saying that if it doesn't make it above a resistance point in 3 tries, it's very, very likely going to fail it, which is exactly what happens here. If you look at it closely, it kind of forms a micro head and shoulders, which is a very bearish pattern, of course. So after that micro head and shoulders, it came for another lower high. All right. And then the dump out. I'll tell you the one really good thing that I learned from this trade. And as we can see, it came back down and I stopped out here. It's a pretty big stop. But what I kept telling myself is like, don't sell at support, don't sell at support, like all that. The thing is, though, is I didn't enter at this support. I entered up here, and that's more of a stop than I want to take. The fact of the matter is if I stop out sooner and then it begins looking good after that support, I can always reset. But what I don't want to do is take too big a loss on any one trade. So I decided after this trade failed that I'm always gonna stop out. Candle close under the 23 fib. Now, when I say always, I mean mostly always. I mean always. It's a rule.
No bending the rules. No
I know,
bending the
no,
rules.
no bending the rules.
That's when you
It's
get into
fun.
trouble.
Yeah, it's funny. Like I almost didn't allow myself to say it. Like I still felt that little FOMO monster being like, yeah, maybe not. No, but always, always. And you guys will see. Like, um, for the rest of the week, all the trades I took, there was one or two more reds, and I did stop them all out right under the 23. So it's like, and also if you let one rule slide, the whole system kind of breaks down. Um, so what I realized is that I need to wait till price action hits support to the T. Easy win says hard stop at 23% regardless. That's right. That's a good word, regardless. Gotta do it. Gotta do it. Um, so like, yeah. So I need to wait for support because I think that like at support, if it really hits that support, it will give you more readable price action. Like for example, it hits support down here. So if I'd waited till it's support, I'd be like, okay, let me look for my setup now. But this right above it is obviously not like that's not a higher low. That's just some chop. So like if you wait for support to see if you can get your read, get your setup, I think it'll be more reliable. I think that's something I gleaned from this. One more thing, and then it's all I have to say about this trade really, is that looking at these longer time frames on the right, I noticed that, and this was after the trade, by the way, but I noticed that RSI and MACD on the 30 did not look good. And I noticed that RSI and the MACD on the 5 minute did not look good. Now, it kind of seems like a lot to me to begin watching all those indicators on all those time frames. But I was speaking with Semper about it, and you know, what you call it? Oh wait, well, easy system very often price comes down to the fib level, but does not touch it. Hate it. Blue flush down, touch it. Yeah. Yeah, then boom, flush down, touch it. Yeah, I know. Price action. Price action can be pretty annoying. But um, but yeah, so I mean it's like in terms of the longer standing time frame, or larger time frame indicators, it's like Semper was saying, if I understood right, that like if it's difficult to read, like the 1 minute right here is a little bit difficult, like it looks like higher lows, but it's also like a bit jumbled, that if you move over to these other time frames, you can get a clear idea of if it looks good or not. And you look on a 30, like, yeah, that doesn't look so good. Um, but but to me, like, I'm still gonna need like a while to like really watch that, and see what I think about it. And I might be getting that theory a little bit jumbled. Um, but then, so that's really all I have to say about about this trade here. I took a red, but it gave me some good rules. It gave me some refined rules. It said, hey, maybe if there are moving averages as support, I mean, as resistance on multiple time frames, maybe don't go long right there. How about that for an idea? It's a good idea. Could be a good rule. And then also, set your stop. Your setup needs a stop that you don't waver from. So it's candle close under the 23. So it was a trade that gave me progress. It was a red trade, but I'll take it as green knowledge P&L. So that's that one. What you call it? Yeah, an easy win. Thank you for your feedback. Does anyone have any additional comments or questions?
Yeah,
Or yeah.
I li-
Oh, wait.
I would like to add a couple of things.
Yeah.
Um, yeah, usually the way the elite system works is, you have a trend line or you have a moving average or whatever, um, whatever we use or whatever comes into play that day, right?
Mhm.
So that's why when you do your pre-market analysis, and you should be doing pre-market analysis to at least have somewhat of a picture for the day, um, and then compare it to the daily notes, just to see if you're on the same page with Brandon, or you can kind of, or if there's a difference, kind of try to identify why you're short and he's long, or vice versa.
Yeah.
But the way that elite systems usually works is, so here's a trend level, right? Or I'm trying to do the 9 EMAs. So here's the trend level at the 9 EMA. With the elite system is once it smashes through that support right there, and this one it didn't even test it. It just smashed right through with this big red candle.
Hmm.
Um, Once it smashes through support, then that becomes resistance. So you kind of got to switch. Not saying that this was a bad trade because it did create a higher low right here, right?
Hmm.
And I'm assuming you flipped it from right here
Yeah, exactly.
to
Yeah.
there.
Yeah, because that first red there, it touched the 9 EMA and the 10 SMA, and it seemed like a decent one.
Yeah, that's decent. So great entry because you got in. You got in where you said you were gonna get in, right? Before I remember you getting in like right here at the top or over
Oh
here.
yeah. Yeah, it's
You
some
you
goofy.
you would get in at different points. So your entries are getting better.
Yeah.
Um, so that's great. And like I said before, fibs will help you with your entries. Once you get your entries down, you can fix your stops. You can't try to fix everything at once. You know what I'm saying? If you have a bunch of issues, you want to attack one issue at a time. So before your entries were a little bit off. Now they're getting more tight, more laser. The only bad thing is what I would have done in this example. Let's just act as if this none of this is here, right? So I
Hmm.
would have fibbed this out. I was like, perfect, higher low on this red candle, and you're like, okay, I'll put a fishing order out. Boom, you put a fishing order out there,
Hmm.
or before you even put a fishing order out, you're measuring. You're measuring, is it worth entering here and getting out at the 9 EMA or at the 100? The reason why I say that is when a fib level lines up with the daily support level, daily resistance level, weekly resistance, daily resistance, or a moving average, a daily moving average, or an intraday moving average. Whenever they line up, that area is going to be a little bit more stronger.
Hmm.
I know a lot of traders say the price action traders, well, indicators they suck. You know, if you use an indicator, you can always make it work. That is true. You can always make it work. The things with indicator is you want to stack them. You don't want to just use one indicator. You want, okay, like the MACD, RSI, and volume or TTM, that all paints a clearer picture. But with one of those alone, you're gonna have bad entries or bad trades. But you combine together, like Captain Planet used to say, with all their powers combined, you're gonna have an awesome trade. Um, but yeah, great entry. The only thing is you should have had a defined stop loss. Right here, it is kind of tough because the 23 lines up with the Bollinger Band.
Hmm.
So if it lines up like that and your stop's right there, then make that your stop loss.
Yeah.
It's always easier. Like let's say, like some new traders always come in and like, oh, well, I'm always getting shook. I'm always getting shook. That's okay if you get shook. Um, but you don't want to get shook with like a 10-point stop loss. You know what I'm saying? Because
Yeah.
a 10-point stop loss, one contract, is $50. That's a lot harder to make back, right? And then if you have a 2-point or 3-point stop loss, you get shook out. Okay, whatever. Let me reset. It's a lot easier to make back $15
Yeah.
to make your day green. But if you're freaking getting stopped out with a 10-point stop loss, you're doing something wrong. Either your entry's wrong or your stop is wrong.
Yeah. I mean, if you have a 10 point, if you get stopped out of 10 points, also then trying to continue your trading day is a lot more like revenge trading. Whereas if you just lost 2 or 3 points, then the mentality is reset. But if you lose a lot, it's revenge.
Yes, exactly. And you don't want to be in that. You don't want to get trapped in that. So taking a little small paper cut is better than getting your arm chopped off.
Yep.
Um, yeah, but like I said, you had your rules, you had your defined rules, and you didn't want to give up that support as long as you have that defined. Like, okay,
Mhm.
but the thing is, okay, it's gonna hit this support, right? And what's our confirmation? Well, it hits that support, and it starts creating a higher low off of there.
Right.
Then that's your confirmation up
Yeah.
off of that support. Another thing that I wanted to add was when LasagnaCat said when a trend tests a level 3 times, it usually fails. Um, you got to take the pattern into consideration, the price action pattern. Like if it tested it 3 times right here, so here's one. Well, actually, here's one, right? Because it tested the 9 there,
Yeah.
tested it there, and it tested it there. At Here's the first test. Here's the second test. The third test, you're telling yourself, I want to see a higher high smash through this thing right here, right? So right here, it smashed, it almost smashed through it,
Hmm.
but it didn't. It tagged it and then it created a lower high. So that lower high, what does lower highs mean? Usually it's gonna go down. Um, so that's what. If it would have tested it a third time and it would have created a higher low right here instead of this, it would have created a higher low right here. Then you might think, okay, it's gonna hold the 9 and then go up, but it didn't. It created a higher low on the third try. There could have been another try here. There could have been another try there, and it could have created a higher low there, a higher than this one. That's what you would want to see.
Yeah.
You want to see it in the trend that you want to go in. But if you're not seeing that and it's already the third try or the fourth try, you're gonna see it continue going down. Not only that, it looks like this is the first leg. Might have not been, but it looks like there's a leg right here.
Yeah.
Usually, when there's two candles inside of each other, like this,
Hmm.
or even like this one right here, and it's only the first leg, there's gonna be continuation down for a second and possibly a third leg.
Right.
Because they always go in legs of three, or unless it's force up. But
Right.
when you see the first leg, and then you're like, oh, I see a higher low, but then you see an inside candle, or it's called the inside candle inside of another inside candle.
Yeah.
It's called the I pattern, is what they call it. Um, but if I would have seen this, I would have been a little bit more worried about, okay, I want to see higher lows off of these two candles. I want to see higher lows creating
Yeah.
right here, and then this would cancel out the long play.
Right.
Um, but yeah,
Cool. Easy's got an interesting question. He's asking, after the third attempt, should we switch to put or just close the trade?
if you're in long, I would. And another thing that you start to see is these top upper wicks at a daily resistance. So like I told Lasagna Cat, my trade would if it was like 4 points to the 100 EMA, which I'm not 100% sure. It looks like it might have been. Remember, when you're counter trend trading, your your profit range is like 4 to 6 points max. Max. That's usually what the bounces are, 4 to 6 points. Sometimes you'll get a 10 pointer, you'll come up here and then you continue going down. Um, but if this from your buy zone to the 100 fib, if it's 4 to 5, maybe 6 points, think about locking in 75% there. As we talked before the meeting, I said if it was 4 points from here to here, This is SPY, so it's only gonna be like 1 point. But 1 point on ES is equal to 10 points. So if you would have fibbed it out from here to here and it's 4 points, lock in, and you're like, oh, it's a daily moving average, it's a daily trend, whatever you have right there, right? It lines up. You're like, okay, let me lock in 75% right here, and then just let the last contract ride or the last 25% ride, and then there's you can either um, stop out at break even, stop out and give some money back, or just stop out up here. As soon as it makes this lower high, you can stop out. It just depends how green of a trade you want to have. Usually for best practice, and I recommend this for new traders or old traders alike, it doesn't matter. Um, what I usually do is lock in 75% at my first target, which would have been the 100. Um, and then I would have tied my second stop loss. I would have moved it up to the 90 MA or the 10 SMA right here. Or if that's what you're using, LasagnaCat, which I think you are.
Mhm.
So I
Yeah,
would have just stopped out there and stopped out there, and yeah, I would have gave a little bit back, but my trade is still green. Um, or you can stop out right here and give a little bit more money back, but
yeah,
that's totally up to you. And that's just the way that I like to do it. Is I never like to exit a trade below my entry, never, unless I have to stop out, unless it's a real stop out. Um, and if you leave points on the table, oh well, just wait for the next setup.
yeah.
But good trade. I see. You may have not seen your entries getting better, but I've seen it. Even though you got stopped out, your entries are getting a lot better.
I used to have those wacky entries. I'd be up here entering. Those are, yeah, those were annoying.
Like I
Well,
said, let's concentrate on your entries, and we'll work on the stop
yeah,
and the other stuff later.
yeah, absolutely. And it's to identify the really the good price action and what constitutes that. So on the next day, which was Tuesday, I had a red trade, and I also had a green one that was cool. Um, but first, I'd like to remind everybody the setup that I'm actually going for. All right, dump out, high or low, enter on the second high or low. I mean, this setup also works with entering on the first high or low, but I'm a little less keen on what makes that work. But regardless, this is ideal and enter on the second high or low. All right, moving right along. All right, so this was a red. Now, this one I feel pretty fine about. I always trade MES. On my last chart, I was showing my SPY chart just because it made a little bit more sense with where the levels were. But yeah, here's my MES chart. So here's a. I'll just walk you through what I was thinking and show you where I screwed up. So dump down, all good. And I need to stop getting tricked by this. I was seeing like these 3 wicks down here, right? And so I thought that that meant that support was real good. And so that kind of tricked me into not waiting for my second high or low, or for sort of getting wrongfully seduced into this trade. Because I believe there wasn't much firm support on SPY. But I'll just walk you through what happens. So I decided I drew a fib, right? Because I saw the RSI overcool look good and the MACD was, closing in on itself, for a possible cross. Um, but this was another situation where I was a little over anxious to get in on my setup, because I didn't even wait for a first red pullback to draw the fib. There was this doji candle that showed up and I was just like, yeah, let me draw it from the doji. Because again, I was a little too overly psyched up by these 3 bullish wicks down here. And the Bollinger Band, Setup looked pretty good. Um, so that's where I drew my fib. And on next candle, I did an entry. Again, a pretty nice entry. As Semper was saying, my entries are getting better. I'm definitely totally happy about that. Also looking ahead a little bit, my stop is a lot better as per my new rule. But let's just go to like the way the rest of it played out. So I entered on this candle and I was like, oh, look, strength. And like, all right, little pullback to the 61, strength. And I was like, yeah, this is definitely going to go to my 161, which like I actually would have taken profits up here, but it didn't quite make it all the way. That might have actually been an indication of weakness for the trade, actually, to tell me, oh shit, maybe I'll just take it off a little bit, take it off sooner than later. Um, but in any case, um, it started flopping around, and you can see it took a big dive down here, but it didn't close below my 23. And remember, my new rule is to close below the 23. So this one didn't close, this one didn't close. And so I thought that maybe it was getting strength again because it was, tooling around up here. This is where 1 minute RSI sometimes confuses me because after being an overcooled, it looked to me like it was maybe creating a divergence, which is a an indication that in sort of indecisive price action that it might be getting ready for a move up, which indeed maybe it was foretelling this move over here. Um, Wait a second. I do remember something. Holy shit. So remember when I said that the support here was pretty good? I'd actually made the same mistake as I did in my last trade. I wish I had my SPY chart for this trade, but I don't. My apologies. So I had there was a weekly fib level to the right here. You see this low and this higher low right here. There was actually a weekly fib there. But again, going back here, when I saw these three bullish wicks near support, I got a little over anxious. So hitting support, interacting with actually support, pretty important, as we all know. All right. So that's sort of the main gist of it. And again, like when I saw TTM sellers sort of getting indecisive here, I was like, all right, maybe it could still work. MACD had the cross. There was enough indications for me at the time to stay in. But since this week, I got completely psyched out by price action, like not coming right to SPY support to a T. This was above it. And like that couldn't create, oh my bad. That couldn't create strong enough price action. Um, yeah. So that pissed me off a little bit, but look, I obeyed my stop out right here. In fact, I think that might have closed a little bit above my 23, but whatever. Oh shit, that's where it closed. It closed there. And then when this opened up, I was like, all right, let me get out. So I was actually a little late on that one, but you get it. Same area. um, but it's worth mentioning though that if I had played my system over here, my well-defined setup, it would have gone great because I remember this day and this move went up really nice. Oh, it's right here, right up here to like the 200 SMA, and then I don't know. Obviously, there's a dump candle right here, but this was not the setup. I kind of screwed myself over. This was the setup. This most definitely like was really good. And there's even a MACD cross to the upside, a fresh one. You can't see it too well, but it's spread out real good to the long side. But that was my second red. Not the worst thing in the world. With this controlled stop out, it was 1.75 points, 1.75 of a point. So not even 2 points. Very reasonable stop out. Yeah, so that's it for that one. Kind of a flimsy trade, but definitely not a heartbreaker. No hurt feelings over here. Slightly hurt feelings I didn't catch this one, which was in my rules, but actually after this, I kind of had to split, like get away from my computer, so I didn't see this. So
Um,
whatever on that, but yeah,
like you had said, it looks similar to the last play.
yep.
It looks like it's in a downtrend, coming in from a downtrend, like over
Mhm.
here
Yeah.
on this side. Um, so you just got to put that rule is if you're counter trend trading, look for 4 to 6 points.
Hmm.
Um, like right here at this level, and this
Yeah,
is just for when you're getting in, right? Because um, once you get experience, you're gonna be like, well, I can hold this, or you'll have a bigger account where you can hold it all the way down here, even though I don't recommend it.
right.
Um, um, but something that could have helped you identify resistance is the RSI right here, this little area.
Yeah, yeah.
Um, and then what could have also helped you if it's creating lower highs from that area? Because like I
Hmm.
said before, I use RSI kind of as a guide, as how many points I might get. Because you entered here, right? So your first target should be the 50 RSI,
Yeah,
right? If it goes above the 50 RSI, then you're like, okay, it's gonna go. This is the way I use it as a guide. If the 50 RSI, and Brandon dropped a little gold nugget this morning, um, and the nugget that he dropped was pay attention to the speed of the RSI. And what I think he meant by that is sometimes um, the RSI will line up with the moving average, a fib, and you're like, well, how the fuck does it line up with the moving average when it's way down here and the moving average is way up here?
mhm,
Um, you want to, like, let's say my target is 161, right?
yeah,
Or this one right here, 161. The RSI will line up with the 161, which it kind of did right here. If you think about it, you're like, well, price action shied 161 right there,
right.
and price action shied the 50 right there.
Yeah,
So that together will tell you, okay, they're aligned together. So that would have been your first target. Once it started creating higher, lower highs, and RSI started creating lower highs, it's a little bit mixed because price action is creating lower highs, but RSI is creating higher. Price action is creating lower highs. RSI is creating higher highs.
yeah.
So you're kind of mixed. Um, but like I said, when you're counter trend trading and it's so close to your target, let's say your target was 5 points. And what did I say? Counter trend trading or scalping is 4 to 6 points.
Hmm.
Um, unless it's like a big weekly level. Let's say it's coming into a week. Let's say the weekly level was down here. On a weekly level, it's gonna bounce a little bit higher, like 8 to 10, maybe 11 points.
Right,
Uh,
because this higher low right here was like a weekly fib level, and then it did real well.
yeah, yeah. So a daily level. I don't know if you guys taking notes, but a daily level is 4 to 6 points. A weekly level is 8 to 10 points, maybe 11, 12 points. But I would for sure close it in at 8. Um, or at least lock in. When I give a range, lock in 75% at that bottom range and let the 25% of your size try to hit the full range move. Um, you can use that using ATM or attaching your target to a moving average or a fib level, and then attaching your stop loss to uh, to a moving average as well.
So Easy's asking 4 to 6 is good enough for me. How often are we getting a weekly level? Well, those weekly fibs have been coming into play a lot recently.
Yes. So like the weekly fibs, the hidden fibs. So it depends. You can have a weekly fib, you can have a weekly trend line, you can have a weekly like not a. I guess it is a trend line, but you know the lighthouse trend line. So it all depends. But we often, I would say maybe two or three times a week it would hit that level. Um, I know I've seen it where it's hit. I don't use the monthly levels, but I've passively have checked the monthly level, and it's had even a bigger bounce in the weekly level. Um, but yeah, hopefully that answers your question. Um, it just depends how tight price action is. Usually, when there's data, it might hit the weekly level a few times. Um, but the levels that you should be using is gaps, dojis, floaters, floating candles, and high range candles. And of course, any trend lines, from like the 52-week high to the low part. Um, those are the trend levels that you should be using. And that goes for the same as the weekly moving averages or the daily moving averages. Those levels will be strong. Hopefully that answers your question. LasagnaCat?
Oh yeah. All right, cool. All right, thanks for the feedback. Um, Let me move on to my green trade from this day. Again, we're on Tuesday. In fact, this this green trade I'm going to share with you right now is the last trade that I took on Tuesday, and then the last trade I took of the week was actually the following day on Wednesday. So it's like um what you call it? Not many more trades to go. Again, it was an off week for me. Oh, December, looks like your annotated drawings are still here.
Yeah, trying to erase them.
They're not on the way. It's all good. Um, so yeah, this was a fairly good setup. Not the ideal because it was like it was first high or low. I'm glad that I got like a first high or low win, which is cool. I based it on the same indicators as the other. I got lazy about not having my spy chart up. Let me see if I journaled what the entry is. Okay, I did. So this right here, this is my MS chart, but it did hit a daily support level on SPY. I believe it was a doji from like a couple months ago, and this plays out perfectly with what Semper was saying, like about 4 points from the daily level, you know. So that's cool. So so same deal. I was looking for it, you know, after a little dump. I need to find a better word for that. Bleed out. Um, there was a nice you know, RSI overcooled and MACD closing in. Um, and it was off really good support. And so, and I was looking at the Bollinger Bands to create some good price action in here. So I drew my fib down again. I drew it from like a weird looking little doji. I don't know about that habit. I might want to get out of that habit.
Hey,
Uh,
those dojis are, especially the white ones like that.
yeah,
Those have significant support resistance, especially if you draw like if it's a straight line doji
yeah,
and you just on the Ninja Trader you just draw a line on that doji.
yeah,
That doji will have many interactions
right,
if price action is within that level for that
yeah.
day.
I feel you. All right. So, in your opinion, it's okay to draw a fib down from it as well?
Yeah.
All right, cool. Yeah, I mean, it's funny because like on the on other trades, it's the first thing to interact with the nine. I mean, these are smaller moving average, but that's the 10 SMA right there, you know, intro.
Yeah.
Um, but you know, this fib was based on good support and drew it down and entered my ad zone really quickly. And I thought it looked good. You know, MACD was definitely what you call it.
Closing in.
Yeah, towards the cross there. And so to my delight, this was a very quick move up to the target. That was the 200 fib and then the 50 moving averages. And obviously nothing to be mad about in this trade. Um, so that's a good little one that worked out. Again, like Semper was saying, counter trend based off of a daily level. and it had a range of like 4 points or so. So that's pretty sweet.
Hmm.
Yeah.
Here's a good example of the RSI lining up with the moving average. And this is, in the morning in the chat when I'm saying, oh, it's gonna pull back to the 200 or it's gonna bounce off the 666 or whatever. I'm using the RSI to give me that information.
Yeah.
So like instance right here, here's a 50, right? I believe that's a 50.
Yeah, it is.
And here's a 50 RSI. So like Brandon said, look at the speed. So you got that when you see the RSI cross a win over call and you see it cross,
Hmm.
uh, um, you and you see MACD closing in, what you want to tell yourself right here on this cross and you see it coming down, right? Let's say you see this pullback. You're seeing this pullback. You're seeing the price action pull back. What you want to tell yourself or walk yourself through on the RSI is, okay, I want the RSI to stay above this line right here. If it holds that, the next thing I want to see is get the MACD crossover and I'm getting in. And
Yeah.
if you see it closing in, because this line will flap up and down, and that'll kind of tell you, okay, it's closing in or it's a false, and because you see this little line every tick on NinjaTrader, you'll see it flap up, flap down, flap up. If it closes and it's flapping up, then I know it's kind of going against branding rules of predicting, but when I line up the RSI and the MACD closing in, I'll jump in a little bit early.
Yeah.
I, I, I won't recommend it for a new trader because you need to get used to how these indicators kind of work. But worst case, look, I would have probably got in right on one of these two candles right here. Worst case is if you wait for the cross right here and you get in on this candle, but hopefully you get in like at the 60%, not up here at the 100. Because once that candle smashes through the 100, you shouldn't even be clicking. You should not be clicking until, and what I'm saying is smashing through, right? The candle is developing and smashes through the 100 on this candle. You're like, okay, I'm not gonna buy it. I'm not gonna touch it. I'm not gonna touch it because it might fail and come back down or squeeze up, whatever it is. Usually the play is the failed 161 breakout. What's a failed 161 breakout? It goes up, doesn't tag the 161, comes back down to the 100 and then squeezes up to your target. Uh, but yeah, the speed of the RSI. So here's a 50, and you're seeing this move up. You're like, okay, smash through the 10, okay, and it still has headroom on the 50 RSI right here. So it looks to me like it's lining up with the 50 SMA. So that's gonna be my first target. That's where I'll lock in 75%. And like I said, I'll move my stop loss from the 22% and attach it to the 10 SMA or the 9 EMA or the 21, depending on where they're at, right?
Hmm.
You depending on where they're at and how much you want to give back. So that's totally up to you if you want to attach it to the 9 EMA, the 10, the 21, whatever one you want to do. Just make sure, just make sure that you get in or that you get out before it gets back to your entry. You want to get in the habit of locking in up here, not near your entry, because you want to lock in. Okay, I caught most of the move there, and then if you see like three red candles like this, I would be closing out right there on one of those. I would be happy to close out right there.
Yeah. Yeah, I mean and also that's still the 161 of this fib. It actually made it up to the 261.
Yeah,
This was really small range this day. In fact, I think for my entry, my target, I got like maybe a little bit more than three, but then from the bottom of it to the top of the move, it's five.
yeah,
Yeah, it's nice.
Hey, Semper,
yeah.
Question for you. You were saying how once it goes shoots past 100, don't even touch it, and I totally get that. My question is, do you ever, like in this example here that he has, it blew through the 100.
Mm-hmm.
Obviously, you don't want to get in once it blew past it, but could you put a fishing order in down at the 100? So like in this case here, the next candle
Like
kind of
after
opened.
here?
No, before that. Right after his long entry. See that big green
Yeah.
candle that shot up past 100?
Yeah.
And
Oh, right here?
then I don't see
Oh,
any. There's nothing. There you go. Yeah. Exactly right there. Could you put, obviously in this instance it actually would have worked if you put a fishing order in right at the 100 after it shot up past it. um, it could have come down and maybe it would have filled right there at the 100 and gone
yep.
up.
Yep.
My question is that a move that you would typically do, or you just hold? Because I once it gets past 100, I always am like, okay, I don't know even what to do with it at this point.
Yeah.
But because it hasn't hit the 1618, could you put a fishing order in at the 100 if it comes back down and then back up? Would that be a legit play, or just something you don't want to mess with?
I've done it like that where it's matched through, right? Because
Yeah,
you're like, oh, it's right here. And then it'll create like another candle right here. And it won't touch the 161.
right,
So as long as it hasn't touched the 161, it's still a failed 161 play. Know what I'm saying? Because this candle right here opened up right at that one, and then it shot down,
right. Yeah,
and then it got sucked back up. So yeah, you could have used that as a the failed 100. But I thought you were gonna say, would you put a fishing order out over here? I would have said no, because it already tagged the 161 and the 261,
right.
and you have three, multiple
Right,
red
right, and I
candles coming in.
and I totally get that too.
But
My problem,
right here, where you said it would have been good because it hadn't touched the 161. But if this big green candle would have touched the 161, then don't even put a fishing order out right here.
right, okay, yeah. So I had a huge problem with this day because I tend not to do these smaller fibs like LasagnaCat has, and I probably should start trying to do those more because what I would have done, this happened to me a few times this week, and there's actually two examples right here where I waited for price action to get up to the 50, around the 50.
Mm-hmm.
So I would have drawn the fib from that right past where he has his target, that red
Yeah.
candle right after it.
Yeah.
I
Right
would have
here.
drawn the fib from there down to
Uh-huh.
the lows, but you can and then put a fishing order in around the 50, whatever the 50
Yeah.
or
Over
the
here.
48 was. But as you can see here, boom, it would have failed and gone down. And then the same thing would have happened on that next move up. I would have waited until around 50, drawn it from that like red
Right
hammer
here.
looking doji. Yeah, that guy took, and that would have failed too. The exact same play would have failed twice. For me, drawing the fibs the way I generally draw them. And that's what I found this week, especially like I think Tuesday and Wednesday when it's kind of going down. I was like, what the hell? I was just doing Sims, so it wasn't a problem,
Yeah.
but I was frustrated.
Are you combining RSI with your fib? Because the RSI might give you a little clearer picture.
So I am, but not as much. I not as much as I should. So I'm still getting used to reading the RSI, and everybody else seems to have a much easier time reading it than I do. For me, I'm still struggle with reading it really well, but I do, and I try to, and I definitely use the Mac and the Macross. Certainly, I like that,
Mm-hmm.
uh, but but they never crossed when my fibs were good too. That frustrated me too. So where the Mac cross on Lozani trade right here would have worked out, it was just about to cross when he got in.
Yeah. Right
You
here.
already went over that. If you
Mm-hmm.
had drawn my fib, the exact opposite is happening, is crossing to the downside really. So during that play, so
Then then
like
there's
that's
your
why I just hold off. Yeah.
then there's your indication. Okay, this is the way that you kind of got to break down the RSI into zones, right?
Yep.
Um, so like for this play, right? For this play right here, what you're telling yourself is, okay, MACD or RSI looks good, MACD looks good. Now, where's my first target? Your first target obviously is going to be the 161.
Yep.
But that target should line up with the 50 RSI. So that should be your target. But the speed that it goes to it, because you know how sometimes RSI would just take its sweet time and it just go like this. And then next thing you know, um, it's at the 400 fib instead of the 161, how it was. So that means that they're not lining up. But what you're looking at is okay, it's at the 161 right here. It's at the, or 161 right here. 161 right here. Where is RSI? Okay, it still has headroom to the 50. At the 50, is it gonna reject, or is it gonna keep? Or is it gonna mount, which it did here? But right here, you want to see it hold and start creating, higher and keep going up. But since it didn't and it lost it again, and then you get the MACD cross, that's your signal to get out right there.
Yeah.
When these two combine, it's almost, I don't know if 709 has any statistics, but it's pretty freaking accurate. Um, but you see it at RSI, like I said, you break it up into zones, but your first zone, the resistance is the 50 RSI. So whenever price actions around, or whenever the RSIs are on the 50, start paying really close attention to the price action. Is it starting to top out? Is there a lot of top wicks, which these three kind of do. If the top wicks are bigger than the bottom wicks, or it look obviously they're strong sell candles, and then you start to see um, RSI hitting its head here. You're like, okay, I might have to close out right here. I might have to just call that my my closeout target right here is a 50.
Right. Right.
But if it would have remounted it right here, right, then price action most likely would have remounted, hit the resistance of the Bollinger Band right here, remounted the 50, tagged the 50. Now you're kind of just walking yourself through it. So, okay, tag the 50. I want to see RSI above the 50 RSI. Because then that's telling you, okay, the trend is changing. The trend is changing to a long trend like this, right? Gonna go up. Um, but if it loses the 50, you're like, oh shit, it might continue going down. And then especially the MACD confirms it right here in this little area that's gonna go down. But if it matches up here, then you want it to hold here. Your next target is a 100. The next target is a 100 moving average. And then with that moving average, then you'd use the top zone of the RSI. So then the 70 RSI, which is the overheat, should line up with the 100, moving average. So then when price action starts to get closer up here, you start to look at the RSI. Is the RSI above the 70? Below the 70? Does it still have headroom pretty much, right?
Right.
Let's say price action's right here. The RSI still has headroom. So you're already telling yourself, okay, there is headroom. There is steam to go up to the 100. But let's say um, price action's right there and RSI is already in overheat. RSI is already over here in overheat. What you want to do is lock in 75%. Doesn't matter where it's at in overheat. Because you don't know if it's going to be a force up and it's just going to stay overheated, over hot, or whatever the whole day. So you'll lock in 75% once it goes into overheat. And if you're short, do the inverse, right? If it's in overcooled, then you would close out at when it goes back into normal range. That's when you would close out your trade. Um, that's the
Gotcha.
way. That's the way that I've been using it, and it's been helping me out tremendously. Like, especially when I see, okay, it's coming up to the 666, right? And I always say it's gonna bounce off the 666. if there's a weekly trend there or whatever, it's even going to have a bigger chance of it bouncing off the 1666 um, or the 666 1 minute. Um, but I'm using the RSI to tell me, okay, it's going to have enough steam to make it down there. And that's something that I wanted to tell LasagnaCat when you add the moving averages, price action reacts to it pretty damn good. So you use it the same. So here's the 50, right? So that's your first target because it tagged it up here and it tagged it right here. The only thing is it's creating lower highs. So you're telling yourself, we said when it tests it 3 times and it's creating lower highs off of that trend, then it's going to continue in that trend. But if it were to test that trend right here, that's 2 times, 3 times, and then the fourth time, because it usually does it 3 or 4 times. If it doesn't break out by the fourth time, what you want to see here in this area is create a higher low off of your buy zone. And then that might tell you, okay, now we're getting ready to go this way. But since it didn't, once it doesn't create a higher low off of your buy zone right there, then you know that it's going to have one more leg down. Because here's one leg, two leg, and they usually go on 3 legs. This is not really a leg because it consolidated for a little bit. But price action usually moves in 3 legs, sometimes four. So here's one, two, three. Hopefully that gave you some tips on how to use RSI to help you with your
Yeah, definitely,
fibs.
man. Thanks.
Uh, yeah. Anything else, Lasagna Cat? Good trade.
Thank you. Um, I got one more trade because Thursday I didn't trade because that was yesterday, that was like the grind up day. So naturally my setup didn't what's the word, show itself. Um, but that's all good. But I've got this trade from Wednesday, and obviously this is one that I like. Again, this is my ideal setup from last week, higher lows to go long with my indicators. And here's the one that I got on Wednesday that was like really, really good. It didn't quite match up my desired price action, like what you call it, like my deal, but it's pretty good. So here's our dump down. A lot of activity closing in the Bollinger Bands with a lot of activity in RSI overcool down here. Um, to start the move. So here we go, big move. I saw that this top green candle had some interaction with 50 EMA as well as standard dev. What was that? That was either +1 or -1. So I drew the fib there. Um, I haven't been watching volume as much as I used to, but I did notice that there was good volume beats here. That TTM was starting to cycle to the upside. Also noticing that down here RSI after overcool, it went up pretty quickly, which I noticed at the time, but today's been talking about the RSI speed, and then it looked like it was holding above the 50 RSI. And over here is where MACD showing a nice wide spreading. So that was my fib from that top to that bottom. And that was my ad zone right there. And I got in right there, which was awesome. Here's the 9 EMA daily again. And here is like an example where instead of support, it represented a squeeze, like a squeeze level. Um, I don't know if there was any resistance on the larger time frame charts at that moment, like with their moving averages. But I can say this: I thought it looked good all the same, and I've seen it squeeze above the 9. daily, many times. And so I thought maybe this will be one of those times, and it was, which was cool. Um,
Order filled.
Now let's see here. I think that might be everything that I went on. Spy. I wish I had my spy chart. It had support. I'd love to know at this moment though if it was weekly support or daily support because that's what we were just talking about. But it was either pardon me, either weekly or daily. I'm not sure. But huge move, I caught, my target was up here. I caught 9 points on this one. I remember I messaged Semper back because I was all excited. I was like, yo, I got 9 points. And I was like, and then he was like 200 SMA. And I said, yep. And then we were like, hey, watch it go to the 666, which is the yellow one up here. And a few candles later, it did real good. And so also the 200 fib right here played out real well. I only wanted to go shy of the 161 because my 200 was there, moving average SMA. Again, it didn't have my preliminary high or low. It just sort of higher load in a consolidation area. And I guess it was also encouraging that there were no stellar beats in that consolidation area. So even though it differed slightly from my ideal setup, I'm really happy with it because I felt like I read RSI really well, the same as well as MACD. I just thought it was a good one. And again, I love getting 9 points on a trade. Uh, so that's pretty much all I have to say about it. Again, a good improved entry, as Semper was pointing out before. My entries used to be really, really wacky. Like you see back here, all the way back here, that used to be my entry. That was my long entry just a few months ago. So anyway, all history lessons aside, this is a this is a good trade. And any questions, comments, and criticisms would be good too, because maybe why would this play have not worked out? That'd be interesting to hear as well.
No criticism, but here's a perfect example of what me and Whiplash were kind of just talking about.
Yeah,
So you get the signal here, right? So from this point, it hadn't touched the 50 SMA. So the 50 RSI lines up with the 50 SMA right here.
yeah,
And look at it, hit itself. And like I told him, what you want to see is RSI bust above that level and then
right.
hold that level. Look at it. It tested it a lot of times.
Yep,
Um, but something that'll help you kind of be like, well, was it a good move or was it not? You want to see higher lows off of this area.
yeah, yeah,
If it starts creating higher lows off of this area right here and it's still going sideways, then most likely the move is going to go up.
right.
But if it's creating lower highs in that type of same consolidation zone, then it's going to go down.
Yeah,
And like I said, to Whiplash is the overheat line lines up with the 200,
yeah,
and
yeah.
it's right here. So if it's like if RSI is about halfway to the overheat, then you know right here you're like, okay, it has enough steam to make it to the 200.
Mm-hmm.
Um, and usually what I like to see is go above the 200, right? And at this point, it would be overheated, which it is. But on this example, it makes it to the 666 in overheat. Usually, what I like to do is, or like to see, is go into overheat at the 200, come back down, kind of reset. Like Brandon always says, it needs a reset, but since it hasn't hit the 666, it won't reset until it hits that 666.
Yeah,
Um, so yeah, typically what I like to see is okay, and usually the way price action moves between moving averages is it's almost like you can read it all the time because it smashes through this 50, comes back down. Look at here's a 50, it smashed through it, comes back down, tests it, goes to the 100, or here's a 100, right? The white line right here.
uh, right here. Yeah,
smashes the 100, rejects it, and then goes up. And then it does the same at the next level. So now it gets above the 100. What's it do? Goes above the 100, comes back, tests the 100, goes up to the 200. The only thing that I didn't see here that I would have had liked to see is hit the 200, come back to the 100, smash above the 200, come back, test the 200 for confirmation up, and then go up to the 666.
Yeah.
It sandwich price action sandwiches itself between the moving averages, and it usually does it between the 50 and the 100. And if it smashes through that level, it'll do it between the 200 and the 100. And if it smashes through the 200, then it's going to do it between the 666 and the 200.
Yeah.
So just pay attention to it this coming week. See how they line up. Start using RSI. Like I told you, like it depends how it lines up.
Yeah.
But the more it lines up, then the more confident you know, because sometimes Brandon says like, oh, all the indicators are off, they're not working today. But if you can identify that they are working, then you can identify a possible play.
Yeah.
So now that you have now that you kind of lasered in your entries with the fib, we're going to introduce the moving averages. So just in case there isn't a fib play, you can use the moving average play.
Yeah.
And then after a couple more weeks, once you get more confident with these two plays, we'll add a third play.
All right, that sounds cool.
That'll be the third play. And then with those three plays, you should at least be able to trade 4 to 5 times a day
Yeah.
with those three trades. I mean, with those three setups. With those setups, you should be able to hit your daily goal.
Mm-hmm.
Now, closer to the small count challenge, what we're gonna do is we're gonna introduce a stop loss,
Yeah.
and we're gonna figure out what kind of stop loss you like to use.
Mm-hmm.
But and you're not gonna know what kind of stop loss you like to use until you actually. I mean, you can start practicing it now. Either a hard open close below the 23%, or at the 23%, or whatever when you're first starting out. If you're gonna start out with 600 bucks, I would recommend a stop loss max of $25.
Yeah.
Um, and that'll give you two stop losses. That'll,
Yeah.
you stop loss once, so you're gonna have a max stop loss of $25. So that's, if you're trading with one contract, that's 5 points.
Mm-hmm.
Um, if that doesn't work, we're just gonna be okay. We're gonna give you a 2 point stop loss. But hopefully by then your entries will be laser, so that
Yeah.
that 2 point stop loss won't even impact you.
Yeah.
Um, so yeah, so we're gonna figure out what kind of stop loss you should be using, whether it's a mental stop loss,
Mm-hmm.
a hard stop loss, or a rule based stop loss.
All right. Sounds cool.
Um, yeah. Thanks
Um,
for sharing all your trades, all your insights.
all right.
Um, ask
Actually,
what's
oh,
up?
sorry. I
Go
have,
ahead, ask any questions if you guys have any questions on anything we've discussed today.
oh yeah, yeah. Ask away. I also have one more slide to share because I want to ask you what you think about adding this price action to my current setup. Um,
Go for it.
got this price action over here. Here's an example of it from today. Today isn't the best example, but I wanted to show you. So far from my setup, I'm basing it off of either a dump from the open, creating a low, or after some price action, a dump to a new low, and then look for price action there. However, I've noticed a bunch of setups in the last couple weeks where it's a dump to like a higher low from previous price action. And I'm like, well, shit, if it still begins with a dump, it'll bleed out. And if indicators that I'm watching are still similar, is that more or less the same setup? And to my mind, it seems like, yeah, because you get a dump out and you look for like maybe a new higher low to be made and then go up from there. Again, this one's a funny example because it's got like the weird double top and but it's still a higher low from the original low. So it makes me feel like it is my setup just in sort of different preceding price action. What do you think about that? Or do you think this is just a horse of a different color? Oh, it looks like Semper's on you for now.
No, that's good. You
Yeah.
want to be able to identify longer setups or longer time, not longer time frame, but kind of see the bigger picture, even though you're using the
Mm.
same picture.
Yeah,
Kind of
because
weird, kind of weird to explain.
right. Well, because like when I saw this forming, I was like, man, that's probably an excellent entry. Like, I was looking at my indicators and stuff, and like I was like, and it's the same level as here as this, but it's a higher low from the first higher low. So I was like, man, that looks kind of good. Um,
What I would do is I would fib it out. I would adjust the fib to see if it lines up.
yeah, like from the top to the bottom.
Yep.
Yeah, it
And
looks
if
like it does. It's
it
eyeballing.
looks like it would line up in the 38%, maybe
Yeah,
even hit the 23%. But
sure.
see this little area right here? This is where it's telling you buyers are at.
Yeah,
Well, Semper, how do you know there's buyers there? Well, because there's a big push up right there off of
yeah,
that consolidation zone, so you know buyers are there.
yeah.
So you see the double top. Where are bears gonna take profit? Where they see the buyers. So they're taking profit here. They gotta buy, right? They gotta buy to get out,
Hmm.
and bulls know that they have to buy to get out. So they start buying right there and they squeeze it. Boom.
Yeah.
But you always gotta look. You always gotta look left.
Hmm.
If there's a little pocket like this, that's okay. Especially this is probably the easiest way to identify where the bulls are. Is right here.
Hmm.
Boom. Where do you buy in that little zone? You want to buy at the bottom. You don't want to buy at the top of that zone.
Yeah.
You buy at the bottom with a stop loss down here, and just if it doesn't work out, just wait for the next setup.
Yeah.
Or if you miss it, okay, let me just sit back and check it out. Okay, it came back into my zone. Let me get in.
Yeah.
But this is the type of stuff that you want to see. This little window right here. And of course, if this would have went down, that's where the sellers are at.
Right.
So if it would have came up from up here, then you would have been short to go down right there.
Right. Cool.
Hopefully
All
that
right.
answers your question. Clears any.
Oh, yeah, it answers it 100%. Yeah. Thank you.
Yep. Anybody else have any questions? Any issues they may be having? Like I said, 709 has been hard at work. He's working on a new catalyst stacker. Um, it's coming along pretty good. We just want to make sure that it's laser before we actually put it out. Um, so some cool toys and tools to come here soon. Um, Hopefully today you've learned how to use the RSI and the MACD together. It helps me tremendously on how to read the chart. But like I said, when you add a new indicator or you're using an indicator, use it to indicate or signal a trade or a price action move or a trend move or a trend. You always want to see the big picture before you see a trade. Uh, and like I said, use the RSI as a guide. It's going to tell you where the good points are, where the buyers are, where the sellers are, um, where there might be a potential trend change. This week, I seen LasagnaCat. His first 4 or 5 trades. That's something that you need to try to identify, and I think it'll help you out. LasagnaCat is Am I trading with trend or am I counter trend trading? If you're counter trend trading, you got to switch that mindset. Remember, the first week we went over mindset. You need to be in a good mindset. So, in the proper mindset at that. So, you don't want to be in a long trend mindset and then you're counter trend trading because that's where you're going to get caught, right? You want to be in a okay, so let's say you do your daily analysis and you're like, "Well, I'm long." And Brandon's short. And you're like, "Well, let's figure out who's right. Let's wait until the open. Let's see who's right." And the picture shows short trend, um, but you're counter long trending. You're gonna find out whether you're a long player or you're a short player right away. You're not you're gonna gravitate to one or the other. We won't and stick to that until you're good at identifying your trend. Like me, I'm a long player. I play long plays. I play long plays 98% of the time, but that's what makes you a good counter trend trader because you have to know that you're in a short trend. You have to know that you're in a short trend to be able to counter trend trade if you're a long player.
Mhm.
Um, but like I said, you got to switch that mindset instead of catching 20 points because you're in a long trend. Instead of catching 20 points, you're gonna narrow down your range to 4 to 6 points. And like I said, daily levels is 4 to 6 points. Weekly levels 8 to 10 points. Monthly levels is like 15 points. Um, but if data comes out, it can throw a wrench into that. So don't always stick to it. Try to develop. Try to have your eyes train how the candle is developing. Sometimes Brandon will say, and if you pay attention to the candle, he's right. You'll see the candle, it'll be like going down, and in the last 10 seconds, it'll get sucked up and it'll close green. And you're like, what the fuck? You need to start you need to start identifying those little nuances of the candles developing because it might tell you, oh, it's gonna squeeze, and that's how he is able to identify when he says, oh, the next candle should be a big green candle, and he's right. That's because he's developed 10 years of nothing but seeing candles, so his eyes already know, okay, the next candle should squeeze, and that all comes with time. I've been doing this for 5 years, close to 6 years now. um, it takes time. This thing takes time. Doctors go to school for 8 years, anesthesiologists go for 10 years and they learn that trade. You got to give it time. Like LasagnaCat says, he takes that P&L red, but green as in for his knowledge. Because next time, he's gonna write that down so next time he doesn't get caught in that same situation. Um, so yeah. Hopefully, you guys journal. That's something that's helped me out a lot. Journal your mistakes, how you're going to correct them. Journal your trades, what you saw, why you got in. Um, and if you didn't hit like, let's say, you're not comfortable hitting the 161, well, identify, it hit my 161. Lasagna Cat, I know you haven't done it or you've already started this week. Is okay, did it hit my 161 target?
Right.
Yes. And try to keep track of it because you say, okay, this trade I didn't, I caught the trade, everything went well, I got out like in between the 100 fib and the 161. But did my trade hit the 161? Yes, it did. Okay, what did it do between there? Okay,
Right. Yeah, definitely.
yeah. Because you start to write this shit down, I had to look up the saying. I'll probably bring it up next week where it's if, if it's in your head. It's like a little circle. If it's in your head, you add emotion to it. It's in your heart. If you write it down, then it's in your heart and in your head. Kind of, it was weird saying, but Yeah, it's head, heart, hand. So you want to write it down, and then you want to add emotion to it. And of course, if it's a red trade, it's going to be, a sad or mad emotion to it. But at least you're going to remember that because it has emotion to it. When you add emotion to something that you're learning, you're more you're more able to pick that up. You're able to, retain that knowledge. So add emotions. Whether you're happy, you caught the 20-point play, write that shit down. Yeah, it'll help you along. I know I thought it was bullshit, but Brandon had always stressed, hey, you need a journal, you need a journal, you need a journal. And I was like, yeah, I'll just journal in my head. And then after three blown accounts, I said maybe he has a point. I should start journaling. Once I started journaling my mistakes, I started learning from them. Instead of repeating the mistakes, I started correcting the mistakes. So thank you everybody for coming, stopping by. Thank you for the questions. The more interaction we have, the more it helps each other. We help each other. So either write write out the questions or join the chat. I mean, just unmute yourself and share. As the more knowledge we combine together, the more it helps everybody else. So thanks for coming. Have a great weekend. Happy trading. See you guys on Monday.
Take care, folks. Happy Friday.
Happy Friday, guys. Thank you.